Hey everybody, we are almost through earnings season, and I wanted to recap the latest results from one of my favorite companies, one of my largest investments, Berkshire Hathaway. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel, and I'll make sure to put that link in the description of this video as well. So let me go ahead and share my screen really quick. All right, so there are four main things I want to hit: the operating earnings, the cash, the buybacks, and the stock portfolio. Those are the things people tend to look at when it comes to Berkshire Hathaway. I will say before I dive in, traditional earnings metrics like net income are not very useful when it comes to Berkshire Hathaway. The reason is because they own, $300 billion worth of stocks, and accounting rules say that they have to include the price fluctuations or the unrealized gains and losses from those in their net income calculations, even though, as any stock investor knows, it's not a gain or a loss until you hit the sell button. So the net income, and Warren Buffett has said this many, many times, is a pretty useless metric when it comes to Berkshire Hathaway. But operating earnings, which is what its actual businesses are doing, can be very useful. So let me go ahead and dive right in. The first screen is the operating earnings. It's fourth quarter and full year. We can just compare the fourth quarter briefly real quick. And so insurance, these are Berkshire's main business lines. And I'll get to the key takeaways in a minute. Obviously, one of the key takeaways is that's a big difference in insurance underwriting income, but we'll get to that in just a minute. So in the insurance business, which is Berkshire's core, makes money in two different ways: from underwriting, which is hopefully bringing in more money as premiums than it's paying out for claims and business expenses. It makes investment income in its insurance business. The cash that Berkshire has on its balance sheet gets invested. It's not just, sitting in a closet somewhere. So that produces investment income. BNSF is Berkshire's railroad business. Berkshire Hathaway Energy is the utility side of Berkshire's business. It has its other controlled businesses, which is essentially everything else that Berkshire owns entirely. And, like See's Candy, Dairy Queen, Fruit of the Loom, et cetera, et cetera. There's a lot of businesses in this category right here. The non-controlled businesses, this is, minority stakes and things like that. I think Kraft Heinz is one that's accounted for in this way. And then other businesses, you can see the little footnote right there, foreign exchange headwinds and things like that. And then at the bottom, you get the operating earnings. Big jump year over year. But the key takeaways, and I'm going to discuss these more in a minute, most of the businesses did okay. The railroad, you can see actually, income went down. Energy, it went up a little bit, mostly in line with rate increases across the nation. The other businesses almost totally flat year over year, and foreign exchange headwinds, but that's nothing that's really in Berkshire's control. The insurance businesses were the two big takeaways. So in underwriting, that was the biggest driver of operating earnings, and honestly, it was just a much better year when it comes to things like natural disasters and things like that. So the underwriting profit was much better. Most of the businesses, as I mentioned, just performed okay. And investment income did increase. That was the second line there. And that was just due to having more cash to invest in treasury securities, but I'll get to that more in just a minute. So the cash stockpile, here we go. So Berkshire ended 2024 with $334.2 billion in cash on hand. That's an all-time high and up from $325 billion at the end of the third quarter, and more than double what it had on its balance sheet at the end of 2023. Now, this isn't just cash sitting somewhere, as I mentioned. The bulk of it is invested in short-term treasury securities, which right now pay like 4%. So this is actually a pretty sizable income stream for Berkshire, and is where that insurance investment income is coming from for the most part. It's generating, just if I had to ballpark it, probably about $12 billion a year in interest income Berkshire is making off of this cash right now. So that's one reason Buffett might not be in a big rush to do anything with it. Um, but like I said, invested in short-term treasuries gives Berkshire tremendous financial flexibility. I don't know of any other company that could spend that much money if it wanted to. Berkshire could probably spend about $500 billion if it really wanted to, just because of how good its credit is and how much money it could borrow if the right opportunity came along. But I don't really foresee it doing that all at once. There's a lot of theories on why Berkshire's raising this cash. Warren Buffett's, souring on the stock market, not, has economic pessimism. Maybe he's just raising cash to, set his successors up to have a lot of money to deploy, because after all, Buffett's 94 years old. But we don't know exactly for sure. He did address this in his annual letter to shareholders and said Berkshire will always be majority invested in equities, not necessarily publicly traded stocks, but in equities. And said we do have a lot of cash on hand right now, but he really didn't address it too much. And another big item, no buybacks. This is something that's also closely watched because it tells investors how cheap or expensive Buffett thinks Berkshire's stock is. For the second quarter in a row, Berkshire didn't spend any money at all on stock buybacks. Those are the only 2 quarters in a while where that happened. Since the buyback plan started in its current form in 2018, Berkshire has spent more than $78 billion on stock buybacks, usually several $billions a quarter. But as you can see right here, there is nothing in the buyback chart for October, November, or December. They usually break it out by month. They did not buy any Class A or Class B stock in the last quarter of the year. So again, we don't know exactly why, but if you read the buyback rule, it allows Warren Buffett to buy shares back whenever he determines that it's trading below its intrinsic value. We don't know if he still feels that way, but it's not compelling enough that he was willing to put any of that money to work. Finally, this isn't technically part of the earnings report, but it's worth noting. Berkshire was a net seller of stocks in the fourth quarter. And just to briefly, because I did a whole nother video on this, so check that out if you want to see all the details. Berkshire was a net seller of stocks, but they did find some opportunities to put money into. Constellation Brands was the big headline new position. They're the parent company of beverage brands like Modelo. Domino's Pizza was a big addition. Pool Corp is a smaller company, but still significant. And the latter 3, because Berkshire owns so much of them, we already knew about. Occidental Petroleum, Sirius XM, and VeriSign were the other 3 stocks Buffett bought in the fourth quarter. But you can see the sell list is significantly longer, including roughly $5 billion of Bank of America stock. DaVita, which don't read too much into that, Berkshire maintains a desired percentage ownership. So as DaVita buys back shares, Berkshire has to sell some of its to maintain that percentage. A couple other financial stocks, Capital One, Citigroup was a particularly big sale. Berkshire reduced their position by like 3/4. T-Mobile US, Charter Communications, Formula One, Louisiana Pacific, New Holdings, which is a Brazilian fintech company, sold its small positions in 2 S&P 500 ETFs, and Ulta Beauty. And those were the stocks Berkshire sold for the quarter. So all in all, I'd call this a pretty solid quarter for Berkshire. I'd love to know what you think about the numbers. What did I miss? What are you watching in 2025? I'll do my best to respond to everybody individually, and thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.